and we'll go over today and typically go over is simply one that I developed on the trading floor and shortly after leaving the trading floor. When everything transitioned to screen-based trading back in 1997, 98, 99, many strategies out there, but there's really only one way that the market works. It's all about supply and demand, meaning when demand exceeds supply at a price point, when that last sell order is filled and you still have competition to buy, which is the definition of demand, price must rise. And vice versa for supply and prices falling. I saw this firsthand on a trading floor. I was a part of it and simply mapped out what this looks like on a price chart. It's not about any magic indicator or crystal ball. It's simply focusing on what's real, not what we feel. Yep, we can definitely look at the Aussie and the Euro in just a few minutes. I thought, though, what might be a good idea is to start with a little kind of lesson from a trade that I took recently. And let's take a look. So this is from, so I also built the strategy into a supply and demand algorithm, finds the levels for me. But I want to use this to much more focus on a lesson. Right? And the lesson has to do with how the markets really work. So try to follow me here. If you have any questions, go ahead and put them in the chat. Not a problem. We can get to them. So prices are trading sideways here. Supply and demand appears to be in balance. All of a sudden, there's a drop in price. Now, why does that drop happen? This drop happens because supply exceeds demand here, right? This drop tells us that decline in price. Right here, the last willing buyer at this price point buys, and you have sellers or supply left over. That competition to sell forces price lower. Make sense? Okay. Hey Sam, how you doing? In the chat, yeah, just yeah, and you'll get some of that right here too, or the white space or novice space as we call it, right? Anyway, if that logic was not accurate, what I just said about the supply zone, and if there was relative balance, if supply and demand were in relative balance, wouldn't price just keep trading sideways here? It would, but it couldn't. Why? Again, supply exceeded demand. So price fell. Okay. Price falls down to this point right here. And then you get all this trading happening. And then price rallies up to the supply zone again, where we expect it to fall, right? There's lots of unfilled sell orders up here or supply. Unfilled orders cause prices to turn. Filled orders facilitate price movement. Again, unfilled orders or supply cause prices to turn. Filled orders facilitate price movement. So let's talk through that. And I'm going to add something to this that we don't talk about a lot. So if the lack of trading activity followed by the strong move in price tells us their supply exceeds demand, there's a lot of unfilled sell orders up here, then the presence of the opposite of that, the presence of lots of trading activity, especially lots of wide and whippy trading activity, all in this range, tells us, what does that tell us? It tells us that there's a lack of a supply and demand imbalance in here, right? In other words, this picture shows us a supply-demand imbalance. This one shows us the opposite. If there was a big supply-demand, because think about it, if we're going to sell short up here and bet on a downside move, what we're concerned with is obviously the supply side, but we feel like we've got that figured out and we're okay with the risk. But then we're concerned with the demand side. Well, if we're going to sell short, hopefully demand is far away. Well, what does this picture represent? Does it represent demand or a lack of demand? That's all that matters. And the picture clearly represents a lack of a significant supply-demand imbalance. How do we know? How can we be so sure? Well, there's never 100% certainty in any of this, right? This is all an educated guess if we're not actually looking at the orders. And the only group that has access to that information is the exchange. So if there was a significant supply-demand imbalance in here, it would not look like this. You'd have very little trading and the price would shoot away. It didn't. Next, what about this over here? What does this picture represent? Right? Again, orders being filled. Therefore, the next time price goes through this area, notice it goes through very, very easy and very quickly. Does everybody see that? Okay. Again, really follow me here. All of this trading activity tells us that a lot of orders are being filled here, so that which means there's a lack of a supply-demand imbalance in here. Therefore, those filled orders or lack of supply or demand imbalance, a significant one, makes it easy for prices to move through that area. See that? So if you understand that, here it is again. All of this trading activity here, we enter our short position here because of that, and because we expect price to move through this. Just like this moved through that, this moves through that. Is it making sense a little bit? Is everybody seeing that? Okay. Here's the thing. Everything on the price chart represents one of two things: filled orders or unfilled orders. Now, let me be a little more specific than that. What we're concerned with is a significant supply-demand imbalance, which causes price to turn, and then the lack of that significant supply-demand imbalance. That's the real key. And the goal is to, if this is what you're interested in and you understand the logic, it's then just training your eye to see that on a price chart. Does that make sense? Okay. Now, being on the trading floor and seeing those orders, it's easy to see what's going on. That's why it was illegal for me to trade my own account doing that, right? Okay. But then understanding that logic, seeing what it looks like on a price chart, thought this example might help. I always try to show real trading examples because it's very easy to go into charts and just pick out perfect examples that worked, and but I want to make sure you understand through real examples. Okay, as always, with this example and anything we're going to go over in these sessions, absolutely you must understand the risk, be comfortable with the risk. Okay, because this is risky. The reality is most people lose money trading. Now, why is that? It's because they don't understand what they're doing. It's because they're not okay. They don't understand the risk. They're not okay with the risk, even if they think they are or they say they are. All right, so make sure you know what you're doing. Make sure you understand the risk. And again, who would buy here, right? Whoever's buying here is buying after a rally in price and at a price level where banks and financial institutions are selling. What are the chances that you're going to be right consistently taking that action? There's a reason why most people are not successful traders, and there's a reason why most long-term investors don't achieve their financial goals. Okay, let's dive into the real markets and let's start to apply this stuff. Was that helpful? If you have any questions, let me know. We're going to start with a market this morning that is important today. And that's a focus on the US dollar. Why is the dollar important? Because it's probably in a big way going to dictate where equity index markets go. It's a key market for us to focus on today. And I say today because of where it's at. So when we look at the daily chart, for example, we see that it's sitting in All right, Sam. So I don't know if you entered that position recently or you're thinking about entering it, but the dollar is into demand here. And when prices are into demand with a profit zone above, they're likely to rally. Okay. So let's go over all the evidence. And when I say evidence, it's this razor sharp focus on what's real, not what we feel. Objective supply and demand analysis and nothing else. So how likely is how likely is it that price is going to turn higher in this level than the dollar? If that happens, it's likely to push equity index markets lower and other markets also, right? Likely to turn, if that happens, your euro's certainly going to fall, right? So first of all, this level is a gray circle, only because it's not in a great location. We've been here a number of times. Okay, so it's certainly not a fresh level. The fresh levels are a little bit lower. So these are the key levels that we're focused on. Okay, could it turn higher? It could, and we're going to look at another chart in a minute to help answer that question. But sitting just below this area, 92.60, there's another demand zone sitting there. So you'd want to keep an eye out on that one too. The other challenge that the dollar is dealing with now, we'll go to the 4-hour chart to see this, because you can't see it on the daily. So we know where it's at in the big picture, but it's struggling with these near-term supply zones. So if the dollar is struggling with the supply at 94, it's likely to struggle more with the supply at 94.50, right? So again, the high probability opportunity for dollar turning higher and inverse markets turning lower is those lower dollar demand zones. Could the dollar turn higher here? Could. It's just a lower probability opportunity. Does that make sense? Doesn't mean don't take the trade. It's just what is in your trading plan, and you have to stick to that. You have to stick to it. Do you take these lower probability levels where prices that are not fresh, that are not in a good location, right? And we have evidence of price struggling at supply here. So if you take those, maybe your plan is you say, you do take all of those, but you reduce the risk or you cut the risk in half. Maybe say you don't take any of those. My point is, from my experience, best to have all that down and, no thinking. All right. So hopefully we're clear on the dollar. Okay, yeah, we're going to move on to some of these other markets too. So that's the dollar. And let's go to, we can really go anywhere next. Why don't we go to the euro? That makes the most sense. Let's look at the euro futures, and then we'll look at some spot markets today too. So euro futures, for anybody in our program here, I don't mean FXStreet. Are there any members of the new venture that we're driving, that one? If you are, maybe you took one of these euro positions here, but you can see what the euro is dealing with also. We've got this not so great location demand zone. That's why it's a gray box against these two supply zones that are under the key areas here. That's why they're gray boxes. Okay. So, right. So they're just sitting up there. Now we've got FOMC tomorrow. That should shake things up. We've got this new, stimulus package. So not that not that the numbers actually influence any of this, but they influence people's decisions. What we care about is there anything coming up that could get people's perceptions to a point where they want to take action, which will help push prices out of these areas and into key levels that we want to take action at. Oh, okay. So if you're short from up here, that's there you go. I wasn't sure where you're short from. All right. There you go. Okay, so let's keep going. Next, just a little bit higher on a smaller time frame, We have a little bit of supply up here. So the gray circle just means, again, not a good location. It's inside the white space or the novice space, right? And then the circle just means it's an off hours level. Can it work? It can. We just want to see other, other evidence. Remember, it's all about structure and location for these supply and demand levels. And if you're going to give up on structure, you better be gaining on location. If you're going to give up on location, which is going to be a good amount of the time, you better really pick up on structure and some inverse markets. And that's the game we play, right? That's the puzzle we put together, every day for those you see that are in the program. This is found on the 15-minute chart, a little supply zone up there. Again, not a high probability level at all. If we want to get out to some of the yellow boxes are the key levels. These green boxes down here, these were yellow levels. It just worked out for us. The exchange is one of the services we have, so just ignore that. Here are some higher probability levels in the euro. So Sam, that's kind of information for you and anybody else who's either short or thinking of shorting the euro. The key significant, supply zones, demand zones in the euro are lower, the bigger picture levels. And those don't start till, just below this, the recent rally up from 1166. So you're 115.71. This is 116.67. Let's look at your 115.71. I look at so many markets each day, I get my numbers mixed up. Let's see. So that's a big target, but let's see. Don't think it's might not be too big. Let's look. Let's go to the bigger picture. Right? So if you look at the daily chart, your target is well before this larger time frame demand zone. And if we think the dollar can rally up, that's going to be the big question. And if you go back to the dollar, we look at the daily, we saw what it's doing on the 4-hour, but can it, can the dollar get up to here? It can. It's going to take time because it's likely to take time because of those 4-hour supply zones it's struggling at. And that's the euro. Let's go over to the yen, and we'll start with the larger time frame. This 4-hour as soon as it comes up. Okay, so yen is a really nice market for us because it does impact other markets. And this 95.41 is not a fresh level. That's why it's a circle. Okay, white circle there means not a fresh level. You can see that first pullback there. Nevertheless, price did not trade deep into that area. So we keep the level on and expect another decline from that area. This level below we're not really interested in. That was a level from before, but the 93.76, is quite a ways down there. But from here, let's go to a smaller time frame first before we come to too many conclusions, because this little demand zone is coming up first. We got kind of close to it, the 94.60, and but didn't get there. Again, great box because it's inside this range, but that's okay. A little bit lower probability. That's what the gray box means. And then lower than that, below that, sitting 94.82, we have a little 5-minute zone. Going over to the spot yen. The 4-hour, I thought we had some demand here. Let me look just below here. I thought we had a demand zone for you. No, we didn't. No, not in the yen. That's right. And not in the spot market. Yeah, this is an ugly daily area that worked out for us, but we, in the yen, ideally we want to get below this low. And I know that seems like it's far away, but with the market showing that it had no problem getting down there, kind of staying down here a little bit, that suggests that price should not have a hard time getting back there, right? How many times have we seen that happen? And when we look to the left here on the 4-hour chart, right, we can see all we're running into down here really pivots. And that's it. Okay. And again, I can go to any market you want to. Yeah, let's look at the Aussie market. Okay, starting larger time frame, right? We can see we're getting pretty far from larger time frame demand. I don't think we have any other levels on this 4-hour here. We had some really good ones that worked out for us. But let's go to the 30-minute. And again, this gray box demand zone, 70.52. These are really two levels on top of each other. And again, notice that this whole, someone asked about white space earlier, or this novice space, as I like to call it. We don't really want to, we don't want to take action inside of this. Remember, all this picture represents is orders being filled. Now, remember, there's supply and demand everywhere. I mean, every time you get a print on the screen, it's because there was supply and demand that made that happen. So no one's, when we say supply is here, demand is there, and all that, there's supply and demand everywhere. What we're really looking for are the significant supply and demand imbalances. Okay, that's what's key. And here we have two on top of each other, starting at 70.52, going down to 70.36. So it's nice, you want to get below that pivot right there. Let's keep going. We just had this 5-minute level, so for those that maybe were in the session, we would not take this again. Price went very deep, and in fact, it poked its way through the level a little bit before turning higher. But again, we don't usually put levels out there like that because you're right in the middle, well, not in the middle, but you're inside of all this. Low probability. When you're inside these ranges, low probability. We want to get outside of these ranges. Sure, let's go to the pound. Let's go to the spot market. And there we're going to start with the 4-hour chart. So let's do that. Okay, because price is just today getting into an area of supply that we have been looking at. Okay, we can see, let me blow this up and scroll back a little bit. So here's 3 levels on top of each other. Obviously, this first one, price rallies in here. So structure-wise, not great. These upper two, qualify better. And there they are, and they're sitting on top of each other. But nevertheless, this zone right here is there's supply here, right? Otherwise, prices wouldn't be stalling out like they are. Another thing that does, so the presence of this zone right here also increases the probability of these zones working, because by the time you would get to these zones, how much buying went on or demand how much demand got used up getting through that level. Again, it's all about the imbalance. When you're thinking about the strategy, so many times I see people just say, supply, demand, there's supply, there's demand. It's the imbalance. It's not one side or the other independently. The focus needs to be both together. That's a very big, very, very, very big point. Below that, no real, at least the chart's not suggesting there's any significant demand until quite a bit lower. And that's the 4-hour chart of the pound that we're looking at. So now let's go to the 60. All right, here's the 60-minute chart. Let me scrunch this up a little bit. So let's see, this 128 even level is Oh yeah. So, the level I'm showing you now on the 60-minute chart is up here. So not a big profit zone with the level I'm showing you here. Location is terrible. So, I wouldn't be, even though the structure is there, that 60-minute level, could we get a bounce from there? We could. We kind of have some secondary evidence here. This price barely got close to that level before turning higher. So a new low is likely to turn price higher, but location-wise and even structure-wise, this is at the lower end of our of even qualifying as a level. Hey Nick, welcome, and I see your question there. Yeah, so we can go over some more basics. I don't know if you're here in the beginning of the session, but were you here in the beginning, Nick? We went over that trading opportunity, kind of explained some of the basics there, but we could certainly do it again. Let's keep going as we do that. Okay. You know what you might want to do, because if you weren't here when we went over this, because I see I saw your question. If you go back and listen to the recording, which are available, I think shortly after the sessions, but FXStreet would know that. If you listen to this, I think you'll get good foundation of the basics. All right, New Zealand dollar. Let's have a look. Actually, let's go here. Yeah, and let's start with the 4-hour chart. Again, based on what we were talking about with our example earlier, I know this level seems kind of far away, but to keep things high probability and large profit zone, two things that ideally we're looking for, you'd want to go below all of this. Okay, if there was a big supply-demand imbalance here, the picture would look nothing like this. The picture would look like that, right? So, you kind of have to wait till we get outside of all this. Okay. When you think of, I know some of you have been with us before. The kind of the red and green, our red and green little people that we look at, right? The stick figures, our whole supply and demand graph. Everybody aware of that? Yeah. No, we'll bring it back. We'll bring it back next session. No worries. But think about it. Where does price spend most of its time? Supply, demand, or that relative balance area in the middle, that novice space in the middle? Where does price spend most of its time? Yep, in the middle. Okay. For me, and you can tell me what you think, but for me, from my experience, it's price probably spends in any market on the planet, probably spends I don't know, probably 90% of its time, probably 95% of its time in that middle or novice space, and probably 2.5% of its time out at supply and 2.5% of its time out at demand. Would you? Yeah, it could be that too. Now, answer this question. Help me answer this question. What percentage of traders lose money? And I know nobody knows exactly what the number is. None of us do. But generally, if you look it up, ask around, just notice what's going on with people you collaborate with. Aren't the numbers kind of the same? Right? Oh, and I see, Sam, you're typing privately, so I think most people don't see your answers. I don't know if you know that or not. I was interacting with you, but yeah, so no, it's okay. Right. Does everybody see the correlation? So what's the moral of that story? I mean, the thing is, it's like what we just said, it's like it's right there in front of us what's going on, right? Does everybody see what I'm getting at here? Price spends like 90% of its time in the middle, very little time out at the extremes, 90% of people that try this lose money. Now, is that the only reason? Because they're just trading in the middle? There's plenty of reasons, but the biggest reason why people have a hard time predicting where price is going to turn and where it's going to go is because it's very hard to predict that in the middle, right? Okay. We need to, when prices get out of the middle and out to those supply demand areas that we talk about so much and go over, right? That's where we can answer that question with a higher degree of accuracy. All right, so just keep that stuff in mind. Let's keep going here. Other markets, we've looked at lots of Forex markets. Why don't we go to, oh, you want to look at the Canadian dollar? No problem. No problem. Let's look at the Canadian, then we'll come back to maybe the NASDAQ. Okay, okay, the Canadian here. Yeah, so let's start with the daily. We've got a supply and demand zone here. Yeah, this is key. So this market, again, here's all that novice space, middle space, but sitting out here, 75.18 up to 75.44, with another area sitting just above it and another area sitting above that. Okay, so up in here, you do have what appears to be, multiple levels of supply. Okay, they're all sitting up there. But you have to get above this high first. Okay, you have to get above this high. So just be aware of that. Now, let's go down to the 30-minute chart, and you can see all the room down to demand. But let's go to the 30-minute chart. Now, here we have a supply, what looks to be a supply zone, 74.91 up to 74.97. Notice that's a gray box. Now, why is that a gray box? Really follow me here. Look at where this supply zone is compared to that. See how that's a yellow box? That 30-minute gray box supply zone is right inside this thing. It's right at the top of this pivot high, which is inside of all this. That's why that's yellow, higher probability. All these gray boxes are lower probability. Doesn't mean don't take the trade. Take it if you want to, if it meets your trading plan. Just understand that the probability is different. So in theory, you'd want to adjust your risk, bring your risk down. Lower probability, take on lower risk. Higher probability, take on higher risk. Never take on more risk than you're comfortable with, right? Your high probability opportunities that come with large profit zones, that's where, in theory, your normal risk should be taken. But again, your normal risk is just a number you're comfortable with. So no one's saying go beyond that. All I'm suggesting is if you have a zone like this one, you might want to cut that risk in half. That's all. But you see now look at the structure of this zone. See that? Look at the structure of this zone. Now look at the structure of that zone. Aren't they identical? I mean, the structure of the zones is exactly the same. Yeah, they are the same. But that's why it's all about structure and location. And so many people have the question, well, why do some levels work and others don't? There's supply-demand imbalances all over the place. That's what causes prices to turn and move in markets. Okay? We want to take the ones that meet that location and structure criteria. And that, in a big way, was the point of what's going on here. Be able to see the order flow that's going on behind the scenes that is responsible for the creation of the candles and prints on the chart. All right, let's look at the, let's start with maybe looking at some of the equity index markets. All that's happened over the past few days, if any of you are in the program with me in the mornings, as prices have gone from our our demand zones here that we found on the 60-minute chart. It rallied all the way up to this supply zone that we've seen on the 5-minute chart. We would never take that one again. And now price is just back kind of in the middle, right? And that's what supply demand does. It forces price back to the middle. So where are the next set of fresh levels? Well, for that, we have to go to the 4-hour chart and get below these pivots. And this one comes in down here, which is way lower than where price is at right now. Okay. Yes, we would say the NQ has been the strongest. So for many months now, for buying opportunities, we've been focused a lot on the NASDAQ. For shorting opportunities, we've been focused on the Russell. So it's really been kind of, if you want to short the equity index markets, which is typically not a smart thing to do, not a bad idea to focus on shorting the weaker market, which has been the Russell, buying the stronger market, which has been the NASDAQ. And that's worked out really well. Okay, so there's that next larger time frame demand zone there, but there's more. This 60-minute demand zone I showed you that hit for us a couple days ago, we kept this level in because notice price just touched the level here. It touched it again here. Okay, that suggests that there's still likely to be a big supply-demand imbalance here on the demand side. So a new low into this level, we would expect to bounce higher. It's lower probability, yes, but still, it's the NASDAQ. It's an equity index market where we want to, typically have a bullish bias from demand zones. We have two levels on top of each other. We already have that secondary evidence, so that's all the evidence. The only downside is these are yellow circles. That means they're overnight levels. They're still working out fine, and we would take them, especially in the NASDAQ, but these are not. These are overnight levels, so those are typically lower probability. Trader, I believe that. Yeah, your answer to answer your question there. Yeah. Typically people find, more success just sticking to the larger time frames, buying pullbacks to those larger time frame demand zones in equities, for example. I don't have data to prove that, but my guess is I'm right. Okay. All right. I'm just reading back. Manej, yeah, I just saw your question up there. So now you're touching on that flip concept that we've talked about so many times here, right? Each level or supply demand imbalance, the significant ones, is there because of another one's existence, right? If you have a strong, like for example, if price eventually gets through this demand zone here, it's going to take a lot of supply to do that, right? We already have that evidence that it's going to take a lot of supply to do that. So that means we will likely be left with a key supply zone somewhere in this area right here. Okay. All right. So there's my email address, and if you came a little late to the session, there's where you can find me on Twitter and Facebook and all that stuff. We'll be having some other YouTube sessions coming up, I think next week, and go over more of this stuff. And hopefully that was helpful. And we will see you next time. All right. Have a great day, everyone. And again, if you have any questions, just let me know. All right. We will see you next time.